Now, for gross income derived from all sources in the Philippines, such as interest, cash or property dividends by non-resident aliens not engaged in trade or business in the Philippines, that will be subject to a tax rate of 25%. Now, that's for, again, the 25% is for non-resident aliens not engaged in trade or business in the Philippines on income derived from sources within the Philippines as interest, cash under property dividends, rents, salaries, wages. Say for example, you have an expat whom you just hired and has not yet stayed in the Philippines for more than 180 days. They'll be subject to the 25% final withholding tax. Now, I'm sure you have heard of regional operating headquarters. Now, have you heard of one? You probably also have heard that Jollibee now has a regional operating headquarter. Now, what is a regional operating headquarter? It is a corporation that is in the Philippines that is actually allowed to do business in the Philippines and earn income from its affiliates. No? Earn income from its affiliates. Meaning, if it's not from an affiliate, then that is not the income that we are talking about for the regional operating headquarter. Now, on any profit remitted by the Philippine branch of a foreign corporation to its head office abroad, based on the total profits, no? A gross income derived by alien individuals, occupying managerial and technical positions in regional or area headquarters and regional operating headquarters of multinational companies from said companies. The gross income may be in the form of salaries, wages, annuities, compensation, and other forms such as honoraria, emoluments, and allowances, except the income, of course, subject to final withholding tax. Your tax rate is at 15%. Now, notice on the slide that you have there alien individuals employed by regional or area headquarters. This would also include Filipinos who are occupying the same technical and managerial position as an alien individual. Of course, the Filipino has to choose whether they will be subject to the 15% final withholding tax rate and they will not anymore file their income tax return, or they'd like to be subjected to the individual withholding tax, which is subject to your substituted filing. Okay, now, on any profit, of course, remitted by the Philippine branch office to a resident foreign corporation, to its head office abroad based in the total profits applied or earmarked for remittance without any deduction for the tax component thereof, except, of course, for PEZA and other special economic zones or economic zone registered companies. The tax rate for that is at 15%. This is what you call the branch profit remittance tax. I'm not sure if you've heard of that. Resident foreign corporations normally would be subject to this. And whenever they would remit profits, they would not also deduct the branch profit remittance tax from the profit remittance. It's like the income tax that they pay in the Philippines. Now, at 15%. Pinagpala sila. Okay. And of course, next is your presumed capital gains on the sale of shares of stock listed and traded through the local stock exchange. Now, of course, the rate for that is 0.5% of the gross selling or resident aliens. Of course, if you're really trading, that will be more than 0.5% of gross selling price. Now, the next income payment, subject to final withholding tax, is, of course, any derived from sources within the Philippines by non-resident aliens not engaged in trade or business in the Philippines. Remember, my discussion a while ago was on the interest that they would earn, the salaries that they would earn. Now, if they would be earning other than the salaries, other than any other, then the income derived from the Philippines will be subject again to 25% final withholding tax. Now again, for non-resident foreign corporations, for all gross income derived from sources within the Philippines such as interests, dividends, rents, royalties, annuities, emoluments, and any other fixed or determinable annual, periodic, or casual gains, profits, and income and capital gains, that will be subject to 32% beginning January 1, year 2000 and thereafter, and if the payee is a non-resident foreign corporation. So this is now where when you conduct a transaction, when you have a transaction with a non-resident foreign corporation, say you want to buy computers from a company located in Singapore, that will be subject to 32% in order for you to deduct the depreciation expense on the said computer. Okay, and then you have gross income from all sources within the Philippines derived by non-resident cinematographic film owners, lessors, or distributors. Now, the payee is again a non-resident foreign corporation. Then, that will be subject to 25%. No? The term cinematographic films includes motion pictures, films, tapes, discs, and other such similar or related products. Now, next would be your gross rentals, lease, and charter fees derived by non-resident owners or lessors of vessels from leases or charters to Filipino citizens or corporations as approved by the Maritime Industry Authority. Again, if the payee is a non-resident foreign corporation, the rate that you will withhold on the expense will be 4.5%. Now, if you have gross rentals, charter, and other fees derived by non-resident lessors of aircraft, machineries, and other equipment, then the rate for that is at 7.5%. Now, the interest on foreign loans contracted on or after August 1, 1986, again, if the payee is a non-resident foreign corporation, the rate for that is at 20%, just like the rate on our interest income in the Philippines. Now that we know all the final withholding taxes, all the income payments that are subject to final withholding, to the income payments, to the requirements for deductibility. Again, as I mentioned before I started the discussion on the income payments subject to final withholding tax, I said that in order for an expense to be deductible from your income, the requirement is for you to withhold the corresponding withholding tax. Therefore, in this slide also, I am discussing that any income payment may be allowed as deductible expense if the tax required to be deducted therefrom has been withheld and paid to the BIR. Of course, you don't only withhold, you also pay, meaning you remit whatever it is that has been withheld on the income payments. And of course, a deduction will also be allowed in the following cases where no withholding tax was made. This is from our Revenue Regulation number 2-98 as amended by Revenue Regulation 14-2002. Now, you have, of course, you have three issues, but if you summarize them, it just boils down to one issue. You have to pay the withholding tax. And that's the only exemption from the requirement for deductibility. If you were not able to withhold because you did not know that it was subject to withholding, in order for you to deduct, you pay. But of course, it will now be subject to penalties. Now, of course, you pay the tax due thereon, including interest incident to failure to withhold tax and surcharges if applicable at the time of the audit, investigation, or reinvestigation or reconsideration provided provided the payees reported the income. Now, you also have to pay the amount that should have been withheld, including the interest incident to the failure to withhold the tax, surcharges applicable at the time of the audit, investigation, or the investigation or reconsideration if the payees did not report the income and pay the tax. Now, how would BIR be able to know that you did not report the income? Of course, if somebody, remember, withholding tax is a two-edged sword. If somebody else reported the income and you did not report the expense, then still that can be that can be verified by the BIR. Of course, the third is in case of under withholding. You say, for example, you misconstrued the services as royalty instead of service fee, and you withheld just 20% instead of 25%, you have to pay the difference between the correct amount and the amount of tax withheld, including to such error, and of course, surcharges if applicable at the time of the audit, investigation, or reinvestigation or reconsideration. Of course, I'm not saying that you have to wait for an audit investigation in order for you to pay the corresponding withholding tax, final withholding tax. But normally, as I said, the final withholding tax and the income payments that are subject to final withholding tax are just known to us whenever there is already an assessment coming from your BIR examiner. Now, the timing of withholding is, of course, when an income payment is paid or payable, or when the income payment is accrued or recorded as an expense or asset, whichever is applicable in the payer's books, whichever comes first. Now, that is under Revenue Regulation number 12-2001, dated September 7, year 2001. That's the end of my presentation. I will now be entertaining your questions. Now, please be reminded that due to the limited time, it is now 5 minutes to 1. I will only be able to answer a few of your questions. Now, for your unanswered questions, you may post it on our Facebook page or you may email it to us.